Hey everybody, this is Paul doing a quick dividend video here. Today is April 15th. Happy tax day to those who celebrate. Market is pretty much all over the place. Lots of stuff going on in April. But I mean, as I said, um, from January up to say March 31st, the first quarter there, I had a really good run. The market had an amazing run. So, in my last video, I 100% expected with what you're looking at right now, especially with more debt issuance coming out. A lot of debt being issued on the long end, and as you can tell, this is what happens. You can see it right here. Very, very big run ups in the long end of the bonds. So when they issue debt out here, this is what you get. Also, oil prices have been jumping around like there's no tomorrow based on the Israel stuff and the Iran stuff. That geopolitical stuff has been swinging this market around a good bit. Are they going to strike? If they do strike, who's going to strike back? If they strike again, who's going to strike? Which way do the markets move? I basically put on Twitter, I was like, or X, if Iran decides to strike, or if Israel decides to strike back at Iran, this entire thing that you're looking at right here reverses overnight, immediately overnight. Pretty much everything you're looking at going on in the market right now goes in the opposite direction. It would be basically what you saw on Friday. So all of this would rally. This would sell off pretty hard again. you know, that's what I was saying. You gotta kind of watch this geopolitical stuff. I hate it, but if you're investing for the long term, so let's just kind of look at what the long term is here. So I do have screenshots. So this was on the 31st, and then we can slap this right next to the current one. So as you can see, number of shares. It's probably the best place to look at this. So as you can see, I've been adding. What have I been adding to? I don't even know what I've been adding to anymore. I've been adding a lot in different places. As you can see, okay, so here we go. Better place to look at it right here. So, or 2024. There you go. So this is probably that difference in SPHD is probably my 401k. That certainly is not me buying anything in the IRA. So right here, probably I added a few there with tax money, I guess. I'm not even sure what that difference is. I got to look at that. But the big difference is obviously going to be BBN. This is where I've been piling pretty much all of my cash into, as you can tell what the difference is here. So the current right there is kind of because the share price has been affected by the market. So as you can see, obviously, this is actually a really good example of this. So beginning of the month, I was at 1634, 1564, as you can tell. So over the past month, if we go to my calculator here, you can tell 2685 minus 2570, and then you just take that and just maybe divide it or times it by like say 16 or so, and that's how much I've added into BBN between all of this right here plus a little bit of this probably, but probably about that much plus also when you add in dividend reinvestment and whatnot. So as you can tell, also if you look here, so you see 171 versus 187 now. And now so this is the current plan, as I've stated in my previous videos, is I'm not looking at this day-to-day stuff. It's We're in that transition period between where the market's trying to time out rate cuts and when all that's going to happen and the geopolitical stuff. I ain't got time to pay attention to it. It's pretty annoying. So my current plan is, as I stated before, from the 1st until the 13th, pile as much as possible into BBN until the cutoff date of the ex-dividend date. Then from the 13th until the end of the month, pile as much in the O as I possibly can to hit the until I hit the ex-dividend date, which I believe is the 31st. I believe it's the 31st. And then rinse and repeat until I start hitting these targets, and then I'll go on to new stuff from there. Um, that's when it'll become probably SPHD. So as soon as I hit the targets here and I hit the targets here, so as you can tell, pretty much where the targets are at now, give or take. Really should keep my calculator up, but and then you go 16, 163, so about 6,000 there. And then if you look up here, probably looking at maybe another 10,500 or so. So that's roughly where I'm at to hit these two targets. And then once these two are green, it becomes SPHD all day of the week. It might become SPHD. By then, I'll have decided if I'm going to go pile that much money in, because that's another 57,000 I would have to pile in SPHD. And as you can tell, obviously, so if you look at this for sure, you can tell the difference. Here's that 2 to 5% correction I was like fully expecting. So if you look at this, right there to right here, and then if you just slap this number, it's actually worse today, but 2 to 5% is literally what I expected, because the market just ran up at just a shockingly ridiculous amount in 3 months. I mean, it's 3 months right there. I'm up 17.5%. Losing 2% in a month was fully expected, especially if you look back just historically. Um, you tend to get just sell-offs every so often. So I mean, this is when they were raising rates. As you can tell, we were in the bear market. You're going to get more negative months than positive months. But you know, it just depends. I mean, I think we're just kind of like after you have this kind of run up. I mean, it was just kind of expected. We just ran so far ahead of where earnings were that nothing that's going on right now is too shocking to me. And then also they're just issuing a bunch more debt on the long end. So everything I'm seeing right now is just fully expected. So currently, as you can tell, dividends up to almost 440. Started the month 15 days ago at 431. That's a pretty nice increase per month. It's taken a lot. I ain't gonna lie. Dividend investing is definitely not for everybody. One good thing about the prices adjusting this much, as you can tell, if I had 150,000 invested, this is what it would have looked like. But 685. Now if I have 150,000 invested, now it's at 713 because I'm getting more for my dollar. Because when it was this high, and I didn't believe they were going to do cuts anytime soon, you start to feel kind of dumb buying that high, especially when SPHD runs up to something like 44. That's when you're getting in the kind of nosebleed territory of SPHD. Even though it was at 48 when the rates were zero, we were hitting 44 without any rate cuts whatsoever. That's a lot. That thing ran way higher. That's why I expected the sell off, because there's just nothing to justify that kind of run up. We're not there yet. This market ran up as if we had done rate cuts in March. It's just not happening. So, in fact, all of this is repricing. There's just nothing. And then you add in the geopolitical stuff, and that's just fully expected. So I guess let's look at like just charts and stuff. Um, Obviously, the thing that came in hotter than expected, core, came in hotter, as you can see. So this is what the bears are seeing. Is the bears are looking at this and thinking to themselves, so as you can see, we went down, 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 kind of flattened out, and now we're starting to go back up. So the bears are thinking we're like going back up to like some insanity like this. I don't know where they're pulling these numbers out from. This core number is specifically made up of this stupidity right here. Where is it at? This stupidity. Right here. That's all it is. You know, we're in a cycle. I don't know when vehicle insurance, I don't know why anybody cares about vehicle insurance. I don't know what they expect the Federal Reserve to do about this. I would like to know what they expect the Federal Reserve. Nobody can actually tell you. They won't tell you because they want the Federal Reserve to cause a recession. That's the only way that this is coming down quick, okay? Like, if you lose your job, you can't pay your car insurance. You'll pay your homeowner's insurance before you'll pay your car insurance. They want there to be just a deep recession. That's the only way this is coming down quick. I mean, it's ridiculous. Like it's this whole thing is just so stupid. I don't understand why people with so much experience in the markets are like freaking out about car insurance. And then OER, of course, everybody's hated measure of just whatever. Um, so this is kind of the problem. So this is when they say that it's harder to get to 2%. This is what they're talking about, is that you need much lower numbers to get this 2% number. So this is a chart that I saw posted. As you can see, you would need something basically below the green line, which is basically right here and blow like in the orange line to basically get 2% anytime soon. So as you can see, you extrapolate this out. The only way you're getting 2% is if you just get a much, much weaker economy. Um, the big thing is, what does the Fed see? So some Fed talkers have talked, and they said that the data kind of looks to them like it's still slowing down. Um, you know, home listings are still down. Like there's just different things that are going on. When do we get cuts is all the market cares about. Like I said, my long-term goal is to build these positions specifically, these ones right here, before building this one. So I should, in theory, if I have another 16,000 to go there, I've pulled about that much, give or take a little. So it's going to take me a while to hit these targets for sure. I'm looking at least until October, November before I hit these targets. 2025 is probably going to be this right here, to be honest with you. It's looking like it's going to be mostly SPHD. There ain't going to be too many portfolio updates outside of, dividends and whatever getting redeposited. Um, that's when all the money I get is going to be deposited in here, and you should see this number jump by, say, 1,800 to 2,000 per video. Um, hopefully, by then we'll have cuts, at least one cut by 2025, hopefully. But as that happens, these numbers should take off. And you can tell just from the prior numbers, these right here, just how fast this can jump. I'm at 31,514, and this is worth almost a full, especially today, worth almost a full dollar less than it was when I had it on the 30th. So if this jumps up by, I own 2,685 shares. If this goes up by a dollar, you can just take a guess how much my value goes up. Um, I did take a screenshot of the Fidelity portfolio today, and I'm still begging Fidelity, please for the love of God, edit out my account number whenever I do this. But as you can see, how down I am on this, and you can see how many shares I own. Right. Oh, I'm looking at the wrong number. Sorry about that. I should be looking at this number down here. That's why I was so confused. So, as you can tell, I own this many shares. So if it goes up by a dollar, I get 2 grand. you know, I did. Bonds don't need to come down that far for me to just start showing ridiculous portfolio gains. But as you can tell, that's not going to happen anytime soon. I just don't. Not until we get closer to June, and then we get into the next quarter, and then we get more earnings out of the way. That I think, once the Fed just starts to kind of like very much indicate that they're going to do cuts, I think that's when, you know, this market will finally calm down and get back to somewhat of a normal stance. But as you can see right now, current plan's working exactly as I expected. Um, it's the waiting game. I don't even know what title to put on this video. It's just a big waiting game. So I think that's kind of where we're at, and that's where I'll leave the video. So, like I said, if your portfolio is just getting beat up, like I said, just take a much longer term view because this is what's going on. Like this bond market is swinging like there's no tomorrow. This whole market reverses immediately. All of this reverses immediately if something goes on in the Middle East. But if the Federal Reserve is like, yeah, we see the data coming in, but we're still going to cut, what you're seeing right here doesn't even matter. Like all of this gets completely repriced out immediately if they say we're still going to cut. Like we're in just kind of this weird game where, like I said, you could see a 2 to 5% correction just because we ran up so much. People want to take profits before tax day. And for all I know, the next 15 days, this entire thing could reverse with one Fed speaker saying, hey, yeah, we're still going to cut in June. One Fed speaker says we're still going to cut. I think the long end, which they don't control, still goes up because that has to normalize eventually. Eventually, this has to be worth more than that. That's just how this works. It's how it's supposed to work. This stuff is still inverted. The 2 is still higher than the 10. This isn't supposed to be like that. You know, that's not supposed to be like that. So hopefully we can fix this pretty soon and get back to normal. But I think that's where I'm gonna leave it. Let me know if you have any comments, that kind of thing. Like I said, it's right now I'm just ignoring. This is all just noise to me. It's so annoying, but I'm just building up my position so that when this thing decides that it wants to take off, I'll be ready for it and I'll be able to catch the severe upside on it. So, have a nice day. Thank y'all so much.